Just turn this light down a little bit. Okay, so are we on?
Yep, we are live and recording.
So welcome to this webinar series. My name is Mark Shawson, the Pattern Trader. I'll just let everybody settle in and then we can get started. We have over 100 participants already. I expect many more in just next few minutes. I'll give this another minute or so and then we can kick it off. So Steven said, are you really good at stocks? I am really good at picking stocks. Yes, I am. And as you'll see, I don't talk about things theoretically. I'm a trader first and an educator second. I've been trading for a long time. I'll kind of get into all of that. I'll show you my own trades. Nothing is hidden. So Natalia says, it's a privilege to be a participant in your live session for educational. So thank you, Natalia. I appreciate it. We've got Philip, hope you're doing well. So yeah, we've got people from New Zealand. So people from all over. Give this another minute and then we can check in. So Patty said it was difficult to log in today. So I don't know why that would be. I'm not on the tech side of my business at all. Dwight, I don't know if you would have any insights to that. I'll have to maybe alert my tech team to something. I'm going to send this to Neelis right now. So I'll get Neelis on the job. All right, so why don't we get started? So welcome again to this live 4-day trade execution series, kind of subtitled it, How to Capitalize on Monster Moves in the Markets and also Avoid the Traps. My name again is Mark Shawson, the Pattern Trader. Just by way of a brief introduction, I've been trading for more years and decades than I care to acknowledge. I've been trading since I was a junior in college in the late 1970s. I went to USC Business School, and studied how to evaluate investments based on what we call fundamental input. Fundamental, if you look at a stock, you look at price earnings ratio, you look at sales to inventory turnover, you study the management, and you try and make decisions based on balance sheet and earnings metrics and things of that nature. I, as you'll see, trade exclusively based on the observation of price and price action, and this is what's called technical analysis. So while I was at USC Business School studying, all of these, fundamental ways of looking at the markets, at the same time, my dad was doing business with a fellow by the name of Graham Loving. Couldn't make that name up. Graham was an investment banker, and he was helping my dad raise some money for a drive-through animal park called Lion Country Safari. But on the sidelines, Graham was actively trading the commodities futures markets. Live hogs, cattle, soybean oil, cocoa, orange juice, interest rate futures, gold, silver. I mean, he was trading about 18 things simultaneously. And, I met him when I was about 19, 20 years old, very impressionable, still wondering what I was going to do with my life. And Graham kind of took me under his wings, kind of showed me what he was doing. And the thing was, I wasn't only intrigued by how much money Graham was making, but how he was doing it, right? So my dad put in $50,000 and Graham put in $450,000 into a trading account. And I guess this was like 1978, 1979. And by the end of the year, that $500,000 account was at $5 million. And again, what blew me away was not only how much money Graham was making, but how he was doing it, which was in complete contrast to everything that I was being taught. Basically, and again, remember, this is long, long time ago, before the internet, before fancy charting services, things of that nature. Graham just simply got a piece of graph paper and plotted an X and Y axis for price and time. And then every day he would just, chart the closes of soybean oil and live hogs and soybeans and corn and wheat and orange juice and about 18 different things. And after about 2 or 3 weeks, he would see the line going in one direction or another. And he'd say, Mark, look, I simply want to buy something that's going up and sell something that's going down. And for my simple mind, that really just dialed in and resonated and really appealed to me. So for decades and decades, I've been building on that price action methodology that Graham shared with me so many decades ago. And over the years, I just added bits and pieces, based on my observation. And now, I've kind of created this layered approach to evaluate, trades. And we'll talk all about that today. I'm going to go into live markets. I'm going to show you exactly how I overlay my analysis, on the markets. But, know this, I've been trading for 4 decades. I traded for some of the biggest banks on Wall Street, some of the biggest brokerages. I traded for high net worth individuals, small institutions, and traded my own account throughout that time. And, it was upon this that I decided to start the Pattern Trader to share kind of what I've picked up over the years. I mean, we can study textbooks, but, what I've learned is that, once you're in the markets, it's a whole different thing. You can see a double top and a head and shoulders, and we'll talk about all of these, patterns in a moment. But, then you have to defer to the markets and see what, what's going on there. So I'm going to incrementally share with you over the next 4 days how I analyze trades, in the live market conditions. I'll take all of your questions, and hopefully, we'll both gain something from each other, over time. So this is, extracts from my own account. Today, I've got 8,500 shares short of BYND. This is a stock called Beyond Meat. And so almost $960,000 worth of market value committed to the short side of Beyond Meat. And then I'm long Tesla in another account. I'm long 1,500 shares, which is worth over $1 million. I bought that at around 7:30. It closed at about 7:43. And so I've made about, $16,000, $17,000 in that today. So I've been short Beyond Meat for a long time. This is my FX profits. Just got one position long New Zealand dollar Canadian. I actually instructed our members to close that out today. So I'm just going to take a very small $4,779 profit on New Zealand dollar Canadian. And then I've got pending orders in gold, a sell stop order in gold at 1781 and a sell stop in the euro yen. So again, I leg into the market on a layered approach. I'll share with you. This is basically what my emails look like when they go out to our members. And, I analyze all kinds of things. So based on what I was looking at in gold, gold was trading around 1789. I said, put in a sell stop. So I always require the market to confirm what I'm looking at. If gold shoots straight up to $1,900, then I wouldn't be put into this trade. Then similarly, I said sell short the euro versus the Japanese yen on a sell stop, and that has not been triggered. And then this was the third trade that I've basically suggested in Beyond Meat over the last couple of weeks. You can see that I said I'm currently short 2 positions of BYND at 120 and 119.75. We closed about 120, 12.70 today. So both of those positions are in deep profits. And, I explain exactly what I'm looking at. And these were the open position profits, in Netflix, suggested to our members to get long at 553 and it closed at 597. short Beyond Meat at 119.75. It closed at 112. And you can see all of these other trades. So collectively, over 8,000 pips in profits. Now I use stocks. If Netflix is up $43, I refer to it as pips just to create an apples to apples comparison. Obviously, stocks don't trade in pips, but I just try and create that comparison. So when I say 4,350, means that trades up $43 in profit. That trades up $34. This trade is up $7, etc. So that's today's stock and FX profits. Now I'm just going to share with you some of the trades that I've done over the last couple of months. So what I try and do is I look at setups that are going to result in big moves. That move could come over 3 days or 3 weeks or 3 months. So I'm looking at the bigger setups to take the bigger moves out of the market. I'm not trying to get in and out, of FX trades for 15 pips or 7 pips here. I'm not looking to, get in and out of stocks for $2 here and, $4 there. I'm looking to take big cuts out of the market. And so these are some of the trades. I started suggesting that our members start shorting QuantumScape, ticker symbol QS, many months ago. This was when QuantumScape was at $40. This was a chart where I got short at $29.75 and held it all the way down through this thing, and had profits of over $400,000 just sitting in this position as it went from $30 all the way down to $24 over that period of time. This is some of the market gains that I made in QuantumScape over that period of time. I also buy calls or puts. These are bets on derivatives. These are options that you bet on directional prices. So a put is something that you would bet on a decline. So in this case, I bought 100 puts in QuantumScape, and you can see it resulted in a $54,000 profit in that bet. And you can see in other bets, I made $125,000. I bought these put options at 80 cents, and they went to $2.56. So, I don't know what that's like a 300% gain. I bought these series, the $41 puts at $1, and they went to $3.45. So I made 350% in that. You can see in other series, I made over 550% on these put options, the $40 and the $41 put options, and made all kinds of money in QuantumScape, over $125,000 in that trade. Now, this was a huge trade that I did back in late May, where I saw a trap where the market went through a certain area, then came back through there. And, I said that by crashing below and then rallying above the neckline, I thought that a bear trap has been sprung. And I said, if this is the case, prices could rocket higher very quickly. And you'll see that, I recommend to our members to buy this at 120. And 3 days later, the stock was at 150. And I made a huge bet on that. I made a huge amount of money on that. You can see these were the stock. I bought at 121. It was trading at 139. I was up $83,000 on the stock there. I bought the 125 Beyond Meat calls for, $2.50. And, I made over 400 grand in that. And then in another account, I made over $600,000. So collectively about 7 figures on that trade. This was a trade back in June on Pound New Zealand. I recommended buying Pound New Zealand. I've got another recommendation to buy Pound New Zealand tonight. On those 2 trades, I was up over $140,000. This was a trade back in January. Despite everybody saying gold was going higher, I've been a huge gold bear for a long time based on what I call this ascending, broadening price pattern. I said right at the time, my target objective was 1,700 when the market was around 1,900. And eventually gold went to $1,675, just about $25 under my objective. So I suggested to our members to sell short there. These are all emails that get sent to all our members around the world, depending on which program of ours you're on. And I, said, add to your trade by selling it at 17.97. And so on those two trades, I made over $600,000. This was a trade in Lyft. I remember I'd just come out of surgery. I was in my hotel room. I was bored. And I saw this trade, and it just looked like a mouth-watering opportunity in the stock of Lyft, ticker symbol LYFT. I sent an email to our members to buy it at $45.83. And I said at the time, I'm personally long Lyft common stock and the $46 call options. I also bought the $47 call options. I'll show you what the outcome of that was. So this is an extract from my broker. I know it's not as clean as a Forex broker that shows you entry, exit, and profit. So you can see these were all of the purchases of the stock that I bought. 5,000 at 45.68, 1,000 at 45.20, 2,000 at 45, 1,000 at 45. So I was buying Lyft stock in the low 45s and blew it out, in the low 60s. And at the same time, I was buying the $46 call options and then the $47 call options. So that's a huge leverage bet on the upside. So I paid 92 cents for these $46 call options. And you can see that I got out at $7. I said that I made, sold for $6. I actually sold for $7. So I made 750% on that in 3 days. And then I bought these $47 call options for $1.10 and got out at $6. So all told, between my stock and option trades, I made over $250,000 in just 3 days in the stock of Lyft. This was a huge bet that I took back in February. I remember I was on a Friday session, and I, basically said there are 5 different bear price patterns setting up in the NASDAQ. I put, huge bet. I bought these put options. I bought almost 300. So that's worth $35,000. You multiply the option price, and it's each based on 100 shares. And at the time, the QQQs, which is kind of a proxy for the NASDAQ, was trading at about 334. And I bought the way out of the money put series on February 19th, but this was expiring on February 26th. So I had a week for this bet to pay off, or I was going to lose all of my money. And you'll see that these dollar put options went to $10, $5, $6, $7, $8. They went to 10. I got out anywhere between $6 and $8. So I made anywhere from 600 to 800% of my money in 3 days. So you can see here, I got filled on all these trades. I bought them at $1, got out at $5.85, $5.75, $6.31, and some at $8.10. And did this in 2 accounts. So I made a lot of money in just a few days. So that's kind of an example of, what I look at in the markets. And now I'll kind of go into live markets and show you, what I'm looking at currently. So I talked about 2 trades that I'm in right now. One that, I've been telling our members to short for a very long time in BYND. This is the stock of Beyond Meat. Now, actually, maybe I should go to a weekly chart. So this is a weekly chart. Now, you'll notice that this isn't a 15-minute chart. So when you go to a weekly chart, it gives you a huge global view of what's happening, as opposed if you go to a 15-minute chart. So we go to a 15-minute chart of Beyond Meat. This is basically, and this is what most people are doing. Most people are trading on very short-term time frames, and they're seeing this. And to me, you can't see the forest for the trees. If this is going up, if it's going down, here was a double bottom, it, went up, then it went down, and, and this is what most people are doing. They're trading on very short-term time frames and trying to extract a few dollars here or there based on some Bollinger Band crossover or MACD or, exponential, crossover, or, what have you. These are called technical indicators. What you'll notice is that I have nothing on my charts. This is what's called a clean or a naked chart because there is no indicators at all. There's no volume, here. I'm not looking at volume. I'm not looking at, MACDs. I'm not looking at, Bollinger Bands. I'm not, looking at, exponential kind of, advisors or whatever you want to call these overlays. And so there's nothing on this chart but price and time. This is what Graham taught me, that you've heard the saying that a picture is worth 1,000 words. And to me, this picture tells me everything I need to know to make a ton of money in the markets. And, to the naked eye, if you look at this chart, you go, well, I really don't see a lot here. This chart this is what it does. It kind of goes up, it goes down. Maybe it's down. No, so now it's going to go back up. And, so what I do is I dig within the price action and try and determine which are the patterns that are directing traffic, which are the patterns that are going to lead to a major move. So remember, I'm looking for moves in the market. This is the move that I made 7 figures on, where I saw that it was a bear trap. It got under here, and I knew that this was going to uncork to the upside. And so what I'm looking for are moves, one way or another. I'm not looking to just take out a few dollars here and there. And so in order to do that, I try and look at which are the patterns. What is this market really saying? And so if you look in this time frame here, we have what's called a head and shoulders. Now, before the webinar, hopefully you were sent a booklet with these technical patterns in them. There's a half a dozen patterns that, with the knowledge of those patterns, you can make a lot of money in the market. So what we mean by head and shoulders is you can see that this made a left shoulder. The peak was the head, and this is the right shoulder. So this looks like a man or woman head and shoulders. And when we see this is a bearish price pattern. This means that, once prices are confirmed, and it confirms by going through the neckline. A neckline is simply a line that is drawn through the entirety of the pattern. So once prices crash through here, this basically said you could short this at whatever, 140, and it went all the way to $40. So this is the implications of what these patterns mean. But now there are just a series of further very bearish price patterns overlaid on this chart. So we have the head and shoulders in this time frame. Then you have a double top right here. And again, double top's exactly what it sounds like. Market goes to one peak, backs off, retests it, comes through here. And then when it comes through the neckline, it basically confirms that this is a bearish price pattern. So we have a double top here, but we also have overlaid with this double top another head and shoulders. So let me kind of get rid of this, not to make it too confusing. So you have the shoulder here, you have the peak here, and you have another head and shoulders. So if you draw it like this, now you have another head and shoulders. And throughout this head and shoulders, this is the neckline, about 113. Let me draw that properly. So you can see about the 113 has been a monster area of support for this stock. But now I'm going to surmise what was old support is going to become new resistance as this thing makes it way lower. And I don't think that this will be an exaggeration. I do think that you will see this as a $60, $50, $40 stock in the future. How do I know that? I mean, do I have an insight to the company financials and the prospects of what? Absolutely not. All I look at is this picture is a very bearish picture. You have a combination of, this double top, this head and shoulders, and now you're just sitting on this neckline that you've, hit like many, many times. So, I believe in, double bottoms. When something makes a bottom, it goes, or maybe even a triple bottom, it goes. but I don't believe in something that makes, 10 bottoms, over the course of, many years as a basis. So I just see that there is no potential for this thing to go higher, and a lot of potential for it to go lower. So I've been recommending to our members to short this stock for the last many, many weeks. And every time it goes down, I start, legging into, more. And so you can see we're just sitting on the moment of truth here, where this neckline has held. And I don't think this will continue to hold. So this to me is just a go to the bank trade. Thing is, you've come down quite a bit already. So sometimes the markets have to kind of bounce like an elastic band before they go again. But, to my mind, this is something that over the long term, this will, keep going lower. Are there any questions on this chart or what I said? So Margaret says, how can I get the booklet? So basically send a message to our support team. You should have been support. I'll make sure that they send it out tonight if it has not. Did I send it to everyone? No, I didn't send it to everyone. So let me put that in again. Yeah, just message our support team. So if, you should just have a basic knowledge of what patterns are. And to me, again, I have no idea about the fundamentals, the balance sheet, how much debt this has, how much cash flow it has, what the earnings are, what the sales. I have no clue. In fact, I don't even care what the name of this thing is. If I looked at a corn chart like this, if I looked at a euro yen, I would trade it the same way based on the same principles. So I trade entirely based on price action. Now, earlier last week, we had a spike in, I'm going to go to the daily. There was some news that came out. Maybe I'll try and find it right now and just put things in perspective. Let's see. There was sorry, let me try and dig that up. I should have done that before this presentation. So there was a news thing that came out on BYND that was favorable to the company. They had some merger, or they did some overseas acquisitions. Yeah, here it was. So here was a piece of news that came out in the morning. So every morning I do a program called the Boiler Room where we go through trades. And, when we're looking at Beyond Meat started to rally $3 to $4 off this news release. You can see McDonald's launches, something with Beyond Meat and et cetera, et cetera. And this drove the stock up $4. And at the same time that morning, I was telling our members in the Boiler Room that is just a ruse, that you can sell into that news. And so when people ask me, do I trade the news? I do not trade the news. I basically look at how price, assimilates the news. And so this is the stock of BYND on a daily basis. Actually, let me make this just a little brighter. Let's see what this looks like if we go just a little, there we go. So before we were looking at BYND on a weekly chart, which means that each one of those bars was 1 week in time. Now this is a daily chart, which means that each one of these price bars represents 1 day. So you can see that a few days ago, I think it was last Wednesday, Beyond Meat closed on the low right here. And then the next day, it opened $4 higher on that news release. And I was saying to people in the morning, I said, that's just BS. I said, you can sell into that thing, and so how did I know? Why was I so confident? I mean, that was a very bullish, report for the company, very difficult to kind of, get in the face of that. But what tells me is the prior history. So it's just like anything else. You know, you have to understand history to understand the present. And I think that's the problem with society today. Nobody has any perspective on, you know, what's gone before. We only look at what's happening now. And so you can see in this time frame, this was a funky double top. Even though the tops were very asymmetric, meaning that this was much lower than that, it doesn't matter. This is still, when you look back at it, an M top, a double top. And that to me, you know, told me that this thing had topped. And if something has topped, it's going to do what? It's just going to go lower over time. And that's exactly what had transpired. Now, in a more recent time frame, you had another funky looking head and shoulders. Now, typically, you know, you have a head and shoulders that this is, you know, a classic head and shoulders that we saw just a moment ago, where we have a horizontal neckline because the shoulders are basically in the same or level. Both shoulders are equal. But in this particular head and shoulders pattern, the right shoulder is lower than the left. And what that means is that you have what we call a drooping neckline, a downsloping neckline. So this has even more bearish implications than just a vanilla head and shoulders. They're both very bearish in the implications, but when you have a drooping neckline, you know, once this thing hits this, it's going to just collapse. And so that's how I knew that this was BS. And I actually used that, the full statement. I said, this rally's BS. You can sell into it. It was at 116 3 days ago, and now it's at 113. And so all of that bullish news, if you don't understand technical analysis, you probably would have bought on that. And so, you know, now we're sitting very precariously on this 113 neckline. This is the line that is, you know, on the weekly basis, you saw, you know, has been all of the support where the market, you know, every time it got here, the market rallies. But I think we're done rallying. And so it was in this time frame. So the market throws you a bunch of different things, and you got to sort out, you know, which is what in which time. So this was always a very bearish looking chart long term to me. But in this area, you can see that prices dropped below this neckline and then, you know, started coming above it. So we had this minor little double bottom here, and then prices started peaking above this neckline, and I knew something was wrong. You know, that I was looking, you know, for this thing to go short and then lower, and by not doing one thing, I had a feeling it was going to do the other. So what I do is I look at patterns, and then I wait for what I call my insurance day bar. And the way I define an insurance day bar is two ways. Either we have what's called a key reversal, in this case where the market makes a new high and closes on, you know, closer to the low than the high. This may not be in the absolute low, but I think we'll all agree close closer to the high, to the low. So this is a key reversal. So you kind of see one of these guys right here, where the market made a new high and then closed on the low. Now, I look at these reversals in context with the trend and the patterns. I don't just look at them in a vacuum and say every reversal I'm going to buy or sell based on the way they reverse. But actually, you had two reversals. You had this guy here too, made a new high, closed on the low, made a new, right in the same area. So this was like a mini double top area right here at 135. And so I kind of know that it's very unlikely now that the market's ever going to go above there. So if you short it here, you know, that's your risk and this is your reward. And so I look for a combination. So once I see the pattern and the trend, then I look for what I call my insurance day bars. And one is a key reversal, and it can be a key reversal, you know, where it closes on the low, or a key reversal where it closes on the high. Both of those are, you know, reversals. And if I'm looking to buy something, I'll look for this kind of key reversal. If I'm looking to sell short or sell something, I'll look for a reversal that closes on the low. Now, sometimes we get what's called a inside or narrow range bar. And it doesn't matter where these bars close. All that means is that this bar's range sits within the range of the previous bar. It's called an inside day bar if it's a daily chart, or an inside week bar. But all this means to me, and so here you have an inside bar, on this depiction where the range here sits within the range of the previous day. So I look for as these reversals and these inside as a way to kind of join the momentum of a trade, as well as knowing or understanding how to manage my risk. And so when I sent out that email, and maybe I can find it, here it was. So right there was that little inside day bar that I'm going to talk to you about. I said, put a buy stop at 120.50, and it was, you can see on my chart, I said an inside day bar. I didn't say it, in the description here, but that was exactly what occurred here, where you had this little inside day bar. So you can see the range from high to low sat within the range of the previous day. Now, based on the way that this failed to go down, so sometimes I'll kind of look at a chart. And so when I look at a chart, this is now what I expect. If it starts going the other way, all kinds of flashing, warnings start going off in my head. And, I'll get on the other side. So you ultimately have to respect the market. So in this time frame, when we crashed this 113, this was my expectation. But once we kind of levitated above this neckline again and put on this little inside bar, I kind of thought that we would have a trap down here, that all the people who try to short it were going to get trapped. And that's exactly what happened. So into the next day, I started buying the stock in the pre-market session at about 121. And by the time it opened the regular market session, it opened at 123, or actually even opened higher. And so once it opened, I was long the stock, and then I bought the 125 call options right at that time for about, I forgot what I paid for it, about $1.50. They went to $23. I paid $1.50 for these call options. They went to $23. And I made 7 figures on that move. I bought a collection of both the stock and the 125 and 126 call options. And the stock went to 152. So to me, this is what I call a counter trend move. This was counter to the main directional trend. And so, markets obviously trade. They go in both directions. But you have to know that this is a counter trend move, and this is a going in the trend move. And, I know I'm throwing a lot of stuff at you all at once, but, I see a lot, going on, in something that looks like nothing. So, most people would open this up and go, well, this is really kind of a nothing chart. And in this nothing chart, I've made, an absolute fortune by just understanding prices and price action. I don't understand anything about the company. I don't care about its earnings. I don't care about a news report that says that it's got some, merger with McDonald's in Ireland. I don't care about any of that. All I see is this price action. And this is what, I try and impart, is that you need to be completely objective. When you're watching the markets and the NASDAQ's going up and this is going down and Tesla's going this way and Netflix is going that way, it's very hard to keep your emotions in check. So you have to really understand what this is telling you. And so are there any questions on this analysis of BYND? So Natalia says, well, so how do you get out of this trade? Well, the same thing that puts me in the trade gets me out of the trade. So I would wait for some kind of pattern. If there was like a double bottom down here, then I would start saying, well, okay, I'll start unwinding this trade, or so I can imagine that once we get here, you'll get some bounce here, but to my mind, this thing has got a long way to go down.
Hey Mark, a question. Can the inside day bar be offset from the high or lows of the previous day?
By definition, an inside bar is inside the range of the previous day. So here you have what I call an inside day bar coil, where you see like 7 days, 1, 2, 3, 4, 5, 6, 7, like 7 or 8 days where the range was the same, right? So you had this inside day bar coil, and simply because I'm expecting this to burst to the downside, once it opens lower, I did just short that in the expectation that now, to me, I look at these coils as energy, right? What they do is they're building up energy in the direction that is indicated by the prior pattern and the prior trend. So, by just looking at this coil, the energy could have broken either way. But by understanding, what the direction was, that this thing is a downtrending market, you have all of these bear patterns here. So this is going to uncoil to the downside. So I look at these inside bars as energy, as storing of energy that is going to uncoil. And you can, really look at the last couple of days in BYND2. You can see that it's really been kind of coiled up in this area. And now any break below this low is going to open up an energy that way. So, the way I catch is I just put a sell stop, a resting order under today's low, whatever that was. I think it was 111.17. And, if the market opens up and goes this way, you're not put into the market. And that's the beauty of it. You don't have to watch the market. All you do is enter your order, put a sell short. It's a little bit different than FX. You have to be able to short the stock, stop at, call it 111, and let the market do all the work. That's all you have to do tomorrow. Put one order in and leave. Go about your day, go and play tennis or ride a bike, and let the market do what it's going to do. And then you can put your stop loss here. So this is your risk and that's your reward. So I'm always looking for trades that are going to relate to at least 3 to 1 risk versus reward. So if I'm going to put up $5, I want to see that I have, a $15 outcome. Now, this is very different than the way most people trade. Most people trading FX, they're trying to get 7 pips, 15 pips, 10 pips, whatever it is. So if you're going to try and make 10 pips on a trade and, you've got to risk 10 pips, you've got a 1-to-1 correlation. This means that you got to be 90% correct on your trades. And nobody can do that. And that's why everybody's losing, is because most people's trades do not have a big enough outcome. So if you're not trying to make 100 or 150 pips on an FX trade, it's very difficult to do 5, 10 trades a day, try and pick out 7 pips here, 10 pips there, and do it consistently over time. Try and tell me one person who does it. You can't. And the statistics will tell you that 95% of people in FX are losing their money because, there's probably a lot of reasons, but this is the biggest, is that they're trading on too short a time frame and the outcome is too small. So I look for moves that are going to translate into sizable moves for a given level of risk. So now instead of having a 1-to-1 risk reward, this is a 3-to-1. And what the math will tell you is that if you set up your trades with a 3-to-1 risk reward, you can lose 72% of your trades and still be a winner in the market. So I lose on lots and lots of trades, but half a dozen trades a year make me all the money for the, all the money I need and then some. When I, take something like this, on a $30 ride, it pays a lot of bills. And so, there's a big myth, when I was a money manager, one of the first things a client would ask me when they're, interviewing me to handle some of their money was, what is your win-loss ratio? And, I'm sure if I said 85%, they would say, wow, that's very impressive. That's great. But if I said, hey, I only win about 35% of my trades, they say, well, it's bollocks. I mean, that's not very good. But, if I can make 7 figures on, that kind of trade and lose a whole bunch of times in here, it doesn't matter. So it's all about math. It's looking for trades where you can set up a trade with the risk reward in your favor and an outcome that is many, many multiples your risk. So here is your risk. So from 110 to whatever that high is, 116. And, I don't think you even have that much. So call it $5. And you could make $50 on this stock and make 10 to 1 risk versus reward. So Garrett says, why do you trade bars versus candlesticks? And that is a good question, and maybe it's habit. So to me, and I don't know about you guys, when I see a bar like this, it just stands out to me. When I see something that makes a new high and closes on the low in the middle of all of this noise, that just stands out to me. And that, that key reversal points in the direction that this thing wants to go. And so, if you use candlesticks, that's fine. There's nothing one big over the other. I just see these things very clearly. I see that reversal there, and I see that reversal there, right in this double top, juncture. And that kind of informs me that that area has been rejected. You have 2 huge reversals. You probably never see this price again, and not for a long time. And so I just see these bars very clearly. I think candlesticks just obfuscates it. There's too much noise. When I see this inside bar, I can see that very clearly. I can understand it. I can see it. Now, like I said, you can't just trade reversals in a vacuum. You had a reversal right here, made a new low, close on the high, and you got to jump out of here. But, if you didn't take it, this is very quickly back in the trend. So not all reversals are created equal. You got a bit of a reversal here, you've got to jump out, but very quickly it made a new low. You had a reversal here, very quickly it made a new low. So I'm looking for reversals in the direction of the trend. So this guy is in the direction of all the prevailing patterns and trends. Gareth, you're welcome. Colin says, price so often takes me in and then goes the other way, and doing it on daily requires a bigger stop. So it does require a bigger stop, but then all you have to do is reduce your position size. And I'll talk about position sizing tomorrow, because that's really important. So you have to, obviously, if your risk is bigger, instead of, $1.20 risk that you would take on a 15-minute chart, now you're taking a $5 risk on a daily chart. All you would do is reduce your risk, your position size. So instead of having, 1,000 shares, you might only do 300 shares. But if you're looking to make, $30 on it, you could make, 10 grand on those 300 shares versus, trying to be in and out for $1 and not, and not being in the move at all. So if you're trading on a 15-minute chart and, you want to just trade on $1 risk, that's fine. So now your risk is bigger. If you want to risk to today's high, which is about 115.30, we're at one. So really this, to me, you have now a $2 risk. We're trading at 113. The high was like 115.30. So you have a $2 risk to make like $30 here. That's the way I look at it. And there are certain times where the market, what I says, it de-risks. It gets into areas where you kind of understand the risk is very small. When it does all these inside day bars, I know if I short it here, I can basically risk to there. And there are certain times, and I did this on QuantumScape, ticker symbol QS, where I saw it a whole bunch of times in the $50 area, then the $45 area, then the $37 area. And at the time I got in, I took huge positions because I knew my risk was very small. So I think you could probably sell this thing right here, 113, and put your, buy stop here. It's $3. So this is your risk, and that's your reward. So, if your stop is, if it's bigger than, what you're used to trading, just trade a smaller position size with a wider stop loss. And that's the other thing. If you're putting smaller stop losses, you're going to die a death of 1,000 paper cuts, because the markets, trade in these wide bands. I mean, if I just extrapolate in the last 3 days, BYND, if you, putting a 50-cent stop in here, you're getting stopped out all the time. So went down, went up, went down, went up, went down, went up, and went down. So this is what most people are doing. Most people are looking at, a chart like this. So now I can't tell the forest for the trees. I mean, I could probably say that this is a double bottom, and, the markets probably could go up from here without understanding all of that weekly history. If this is all you're looking at, and then you're looking at some Bollinger Band and waiting for some, thing to jump out of here and, try and take a few bucks, and then it, to me, that's why most people are losing. They're trading on too short of time frames. And then, if somehow, this thing starts crossing over here, what's your take profit? It's like you got $1 before it comes back in your face again. And so this is why, I try and get on a position and then look for the bigger move. And in order to do that, in order to avoid all this noise, you have to put your stops wider. You have to put your stop, above here today, or certainly above there. And that's what? That's $2, and that's $3 away. So all you do is, instead of, doing your normal position size where you're trying to get in and out for 50 cents, do a smaller position size and try and get, 20 bucks out of it. That's how you make money over a long time. So Gareth said, this is quality content for no charge, very transparent, maximum respect. So, I try and be pretty different. You can go to our review webpage. You can see we've got over 150 reviews, so I'm as real as a heart attack. I do what I tell you I'm doing, and I make these trades in my own account, and I show you exactly what I'm doing in real time. So some people say this is a scam, and I go, how could this be a scam when I'm showing you what I'm doing in real time? Well, win or lose, I don't know. Beyond Me could go up $8 tomorrow. I could look like an idiot. But I'm telling you what I'm seeing now and how I handle things now. Greg says, how far out would you put it beyond? So it really depends on what you see. So I think beyond's going to crash very quickly. Puts and calls are a whole different thing. I typically only go 1 week out, which, is very risky, because I know where Beyond Meat's going to go over time. To try and bet on where it's going to be, from 1 week to the other is a very tricky thing. But I've made a ton of money betting on, puts and calls. So what are we trading at? 113 now. So, you might go to even the 110 puts are trading at, pretty expensive. They're trading at $1, which means that this thing has to close at 108.89 by Friday for you to break even on that bet. So it has to fall about $4. Now, this thing could fall $4 in tomorrow's opening session. So, that's kind of the bet you make when you're buying these puts and calls. Not only does the instrument have to go in the direction you anticipate, it has to go in the time frame. So, these expire on Friday, September 17th. So, it's kind of a judgment call which series you buy. Obviously, the further out you go, the cheaper it is. But then, it's also harder for the stock to go through that. So it's a push and pull. But I think the timing is very close where this thing is, going to cave in, and, you could probably make some money on some puts. Greg says, so do you recommend shorting? Yeah, I short as well as I go long. And to me, I'm agnostic, to the direction. I will, this thing looks like it's going lower, so you have to sell short. That's a whole different mechanism in stocks. This is something that your broker does for you. To go short, effectively, you have to borrow the stock from someone or somewhere, and the broker lends it to you, charges you a fee for that. And then, when you buy, you basically cover that short. And, but the broker does all of that. I'm not going to get into that. I just look at this thing directionally. Is this going up or down? So, I'm shorting this, and I bought this today. I bought Tesla today. So one stock I'm short and the other stock I'm long. And so I've been looking at Tesla kind of over the last couple of weeks. This is the daily, and I'll look at it on the weekly too. On the weekly, you can see we have this, big double bottom in here. And then you have this kind of ascending triangle. So this is the insurance day bar that I just talked about. So this is what we saw today. This huge key reversal, made a new low, closed on the high. So that basically tells you they try to push it down. These guys try to sell it there, and there were no takers, and now it closed here. So this basically tells you, where your risk is, which is obviously now a long way away. If you buy it at 743, made a low at 708 today. But, so what I look at is a collection of these key reversals. You can see right here, this was a key reversal, even though it closed red, closed toward the high end of the bar. This was a key reversal, made a new low, close on the high, 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 made a new low. And you can see every time we did that, we made new highs. So the market actually points in the direction it wants to go to. That's my philosophy. The market points. These guys are pointing where this wants to go. So you don't have to guess. You don't have to know what, Elon Musk is tweeting today. Just watch what the market tells you where it wants to go. So that's the daily chart, and this is the weekly chart. Let me just make this a little brighter. So you can see that Tesla has been going up along this. Look how beautifully. I've been trading for, like I said, a lot of time. And it never ceases to amaze me that every day you come in with, random things happening, budget discussions and, Tesla, production numbers and, all this stuff. And yet over time, randomly, the market's trading every minute of every day. And yet, you see how the market, adheres to certain, levels. And it just boggles my mind how, this happens. But this is why I just look at the beauty of price and price action. And this tells me everything. So you can see that this thing is in an uptrend. And then once it's in an uptrend, we try and determine when and how to get in this thing. And you can see right here, you had this double bottom here. And now, this is, just today, this is a weekly bar. We won't know where this closes until Friday. So it's kind of very tricky in here because you've got some support, but you've also got resistance here. And it's, it's going to, play between the 740 and 760 zone. But basically, if this thing closes on the high, this is pointing in the direction it wants to go. You can see, this reversal here, this reversal there, that reversal there. It all pointed in the direction that the market wanted to go in. So through a series of patterns and price action, the market tells us what it wants to do. You don't have to be a genius, and you don't have to, buy the Wall Street Journal, which, is not going to tell you how to trade. So now, you could still get a pullback here and what have you, but over time, this thing looks like it wants to go back to the old highs. Colin says, sorry to be specific, but do you put your buy sell above or below the price at the start? Okay, so the way I would handle Tesla into tomorrow's action is simply put a buy stop above today's high. So you have this key reversal. So once I kind of understand my pattern and then I see the price action, then I look for confirmation from the market. And the way I see confirmation is that I sneak in a buy stop right above the high here. So I think today's high was 744. What was it? It was 744.78. So basically 745 would be a new high. So I would just put in a buy stop here, you know, buy at 745 on a stop tomorrow. That would be my order. Now, you know, this is a bigger risk now because, you know, this bar is so big that your stop loss really has to be there. Otherwise, it's just arbitrary. You know, this thing could, you know, obviously go make a new high and, you know, do all kinds of stuff, which it's apt to do. And so in order, you know, to take a bigger risk, you take a smaller position size and start legging your way into it. And so you buy, you know, your first thing there. And then, you know, if we start getting above these highs, I would start buying more. So what I try and do is consolidate, build a position. And then once that thing breaks out, now you've got, you know, you've bought in a few places. And, you know, I showed you on gold where I sold gold at whatever, 1842. And then I sold gold at 1797. And then it crashed 150 bucks and I had, you know, double the position on. So I will look to build a position. So you incrementally start feeling your way in here, legging your way in. And that's how I would, you know, handle that. So Natalia said, you don't wait for additional inside bar. You know, this is a very tricky area. I mean, one of the things you could do is, you know, hope for a dip tomorrow. What I do is I use these. So I feel like now this market has shown us where the low is, where the risk is. That, you know, if we start taking this out, you know, it would open up a whole other Pandora's box. So I now start with the premise that I kind of will buy this thing, kind of understanding where my risk is. And so obviously, you know, if it opens lower tomorrow, to me, that's actually more appealing because I can buy lower, understanding that my risk is now that much instead of buying here where it's this much. So I will use, sometimes the market gives you these lower openings to get in. So I remember, you know, before even Beyond Meat started trading, you know, in the session where it was at 120, I was able to buy it in the pre-market session early, and then it opened above here and kept going, you know, but sometimes the markets, Dow might, you know, come in 500 lower for some reason tomorrow. And you can see Tesla going down $8 or $12. And I would just buy into that, you know, feeling like this was my risk. So if I could buy it here, you know, I've got a much shorter distance to where my risk is. So I think very unlikely that you're going to see tomorrow's action go like that. I would highly doubt we'll see that. So if I kind of understand where the risk is for now, I can kind of, you know, feel my way in. I mean, this is a tricky area. I think it's going to be hard just for it to go up against this stuff. So it's going to be interesting to see how we make our way through here. But, you know, this thing could just gap here and go. I mean, it could do anything. Once you have this level of, you know, indication. So, but that's, so I basically use this as an anchor. You know, I use the unchange as an anchor. You know, if we start going higher and then, you know, and if then we were, you know, then collapse and go through yesterday's close, I'd say, well, okay, that's a key reversal. I don't want to be on the other side of that. So I kind of, you know, look at how prices, you know, dance around, you know, the unchanged after it's done one thing or another, but it's just too complicated. Simply, this is in an uptrend. You've got this double bottom here. You had a very rational place for it to hit. I'm just trying to find a different color here. So, you know, when it hit here, this was just in an area where there's been a prior resistance. And whenever you see a key reversal in some other prime time frame, not surprising that we hit this area and had a sell-off. Not surprising at all. And then I want to see how, once we sell off, does it keep going? Or does it put itself together like Humpty Dumpty? And, the way this thing put itself back together, it, suggests that, yeah, this is just an area of some resistance, but incrementally, eventually, this thing's going to get through here. Now, again, tomorrow, if we have this reversal, and by the end of the day, we're looking like this, where we try to get in here, and then it collapsed and now close on the low, then I probably would have an entirely different, view of it. But for right now, I'm long, and let's see what happens. All right, so that's basically, we have 4 days. I'm going to, talk about these things. What I'm really trying to show you, people asking me to show you all kinds of charts and talk about all kinds of things. What I really want to impart is a methodology, the way I look at prices. So, this is a pretty short, even though this is more than a 6-month time frame, probably a lot more of a time frame than most people look at. It's still hard to tell what's going on here. This is, still kind of arbitrary. That's why, in order to get a bigger sense, I always put on more time. If this is not enough time, I try and peel out and try and get a bigger context. Now, this kind of tells me a little bit of a different story. And so I try and get as wide a view as I can, and then try and narrow it in as to where I can get in, to join the momentum of this trade, as well as to establish my risk. And so it all starts with direction. So the first thing I'll say to myself, when I open up a chart, I don't care if it's the euro, yen, corn, natural gas, crude oil, gold, it's all the same process. So by and large, what is this market doing? Since last October, a year ago, what is this market by and large doing? It's been in an uptrend. It went from 350 to 750. So over the last year, we've been in this uptrend. In the short term, you have this uptrend line. Then you also have this pattern. So you have the bottom, the pattern, you have the ascending triangle, you have a series of these patterns. And then, once I kind of understand the direction, the pattern, then I start digging in and wait for my insurance day bar. I wait for a market. So today, if you weren't in, you avoided getting clobbered. This thing, cracked from 620, down, from 760 down to 700. So now you avoided all of that. And now you can join this party knowing that you're getting in at the time and the place that this thing is ready to go. And you understand your risk. So if you get in here, this is your risk and that's your reward. So what I try and do is, identify places where I can get aboard the trade. I can understand where to hop aboard the momentum, and also to understand my risk. And that is the holy grail of trading. People say, well, if I only knew this or that, if you know this, that is the holy grail. Even if you lose, if you know this and do this methodically over time, you will win. So I'm not going to look at all of these charts. I've been on for an hour. I'll address questions on the 2 charts that I spoke about. I really want to drive home methodology. We can look at 6,000 charts, and over 4 days, I will look at many, many different other charts, I assure you. So what I really want to do is drive home the thinking, the analysis, how to look at things objectively. So once again, you'll notice that there is nothing on this chart. No volume, no Bollinger Bands, no nothing. It's just clean. It's just price and time. And frankly, you shouldn't even care what this chart is. Shouldn't even have a name on it. You should be able to look at this chart and say, okay, if this is the euro yen, if this is oil, if this is New Zealand dollar versus Canadian, I'm going to approach it from a certain, risk reward, kind of, entry and risk management perspective. So John says, how do you avoid being stopped out by large spreads? Well, by putting larger stops, right? So you don't, put your stops, where there's a lot of noise. Obviously if you have to buy here and put your stop loss there, then you're going to do a smaller trade because that's a $35 risk. Now, you don't really have to, my premise is if this is going to go higher, then it should go higher. I mean, if it opens a small amount and starts going, the momentum should, keep, catching it here. So to my mind, you don't have all of this risk. I don't think you're going to see that taken out, but theoretically there's going to, could be a lot of noise here before it gets going. So you just keep your stops wider, do your position smaller and keep your risk wider. And I'll talk about position and lot sizing and all of that tomorrow. So Colin says, can you trade contracts instead of Forex? So you can trade any, if there are two insects crawling up a wall with some price history, I'll trade that. Anything with price history, you can trade. Futures, interest rate swaps, whatever is a tradable instrument that has a high, low, and close, you can trade using, this is what I trade. What is the direction? What is the pattern? Where's my insurance day bar? And then I layer it with, a buy stop in a market that I want to buy or a sell stop in a market that so it's a 4-step entry. One, step one, what is the direction? This is an upward direction. Step two, is there a pattern? Yes, there's a double bottom here, and there's an ascending triangle here. 3, can I identify my insurance day bar, a key reversal or inside day bar? Step 3, here's your key reversal. Made a new low, close on the high. Step 4, Step 4 is we layer it with a buy stop above the high of the reversal bar. So here you have direction, pattern, insurance day bar, and your execution strategy. So this is a 4-step layered approach to get closer and closer to the bullseye of a winning trade. And what I'm looking for is a trade that does that. Now, not all of them do that, but you don't need too many of them if something runs like that. You just want to put yourself in position half a dozen times a year for monster trades. So Mark says, in your Tesla, how do you determine the reward? How do you measure that? So this is all I can control. I can control my analysis. I can control, what I'm looking at. I put my buy stop, and if the market just opens tomorrow and just fails, that's fine too. My buy stop's not triggered. So I require the market to confirm what I'm looking at. So now let's say that I'm put in at 745 on a stop, and I have my stop loss at, it should be at 708. I mean, that's really where it should be. So you buy it at 745 and your stop loss. So that's your entry. Whoever Mark says, how do you determine the reward? So how can you measure? Sometimes there's a measured move where you can kind of measure to the top of a pattern to the bottom. So that's what, 540 to 760. What's that? 220. So you can kind of say, okay, that's 220 from the top of the thing to the bottom. Let's say I just get 60% of that. So what is that? $150. So just add $150 from 760. It gets you to 900. Just a measured move. So I don't know where something is going to go. I don't know in what time frame it's going to get there. All I can control is my risk and reward. If you can understand where your risk is, then that's all you need to understand. Where and how this is going to, get where it's going to go, that, we can't possibly know. That's not really true. I mean, there's just certain formations that tell you that the market's just going to go in a certain direction, like Beyond Meat. Seems like beyond question is going to go lower. And this feels like this is going back to 900. So John says, for smaller accounts, would Forex be best? And again, I think whenever I talk in terms of bigger moves, everyone thinks you need a bigger account. So if you, just bought 7 shares of Tesla or 12 or whatever, it doesn't matter if you have a $2,000 account or a $200,000 account. You can still do this trade. This trade, you would put on 2,000 shares, and this trade you may put in 20 shares. But you're doing the same trade with the same risk reward setup. It doesn't matter the size of your account. So John, the thing is, I look at everything, but Forex has gone to sleep for the last 3 months. I would, go broke if I was trying to run my business right now on Forex or trying to trade on Forex. The dollar's been in a trading range for a long time. I expect it to do so. Dollar's been higher, but it's been basically in this trading range market for a while. You can see it's like kind of gone to sleep. And so I just look for, I don't care what market, I just look for where the action is. If it's gold, then I'm going to trade gold. So I just try and go to where I can see a risk reward trade. I'll talk about gold tomorrow. I think gold's going lower. I'll tell you why. But I just go where the action is. So you shouldn't go, based on the size of your account or whatever, because I think behind that there is then the inclination, I'm going to trade this for 7 pips or 12 pips or whatever. And to my mind, I will not trade a Forex pair if I cannot see my way to making 150 pips. And most people, have never made 150 pips in their life. I know that because they tell me on my review website. And I will not enter an FX trade unless I can see some path to making 150 pips. If I can't see that path, I don't do it. And so that's why I haven't been trading much Forex, because, this is what you've been looking at. This is just a buzzsaw. This is dollar yen. So this is like pushing on a string. I mean, I don't want to do that every day. I don't want to try and figure out where the next 7 pips are going to come from. I want to short Beyond Meat and take out the $20 there and buy Tesla and take out $20 there. Ian says, does AMD? So I don't want to take a whole bunch of questions. I could get off the topic here. I think I'm going to shut it down here. So AMD has got this key reversal here. It's got a bit of a support level. This one is tricky. So it broke out. So some charts are just very, so with Beyond Meat, I can, pretty much confidently make a lot of predictions. So again, to my mind, you need a lot of time history when you're looking at something to understand it. And then when I understand what the bigger vision is, then I kind of drill down if I see a risk reward. So this, to me, is kind of in no man's land. It's kind of really not a buy or a sell. I mean, this is the same kind of thing. I'd say, this is clearly in an uptrend. We recently broke out of a monster consolidation thing here. But this also could be a bull trap. If we start, re-entering this atmosphere, under 100 or 95, this could be, the trap that I saw in Beyond Meat, where the people chasing, this last leg could get really trapped in here. Hard to tell what's going on here. So this is a weekly chart right now. It looks like a bit of a reversal, but that's just today's action. If it were to reverse. So I think it's just in this consolidation zone. I wouldn't buy it. I wouldn't sell it right now. I would watch it. And, stocks could go into, you can go into a consolidation for a long time. And so this looks like neither here nor there. All right, guys, I'm going to end it today. I'll try and get my team to send you out the book if you didn't receive it. Dwight, what are we doing this week? Are we handing out my book?
I wasn't instructed about any book or
All right,
video.
I'll talk to Peter tonight to discuss. So Gareth says, legend, Mark, much appreciated. Gareth, thank you very much. Natalia says, thank you for your great analytic presentation. Colin, good to see you too. All right, guys, I hope, again, the whole purpose of this thing is to instruct and inform, right? To kind of give you the basis to make independent financial judgments where you don't have to rely on commentators, you don't have to rely on the Wall Street Journal. Price is the news. I would say the market is a discounting mechanism. The market is ahead of the news. So AMD was a dog company, right, for a long time. But then price started, doing something way ahead of, what, the results were. And so, we have to watch price. Then, the news usually comes later. Why a market did this or why something usually reveals itself 3 or 6 months down the road. The market is a discounting mechanism. It starts jumping or it starts forming this double bottom way ahead of this known outcome. Francis says, thanks, Mark. I've got new hope. You're welcome, Francis. All right, guys, we will see you. Ola says, thank you, Mark, for an excellent webinar. Thank you for that. So I will see you tomorrow, 4:30 Eastern Standard Time. Dwight, thanks a lot.
No problem. See you tomorrow.
See you guys tomorrow. Thank you.